Good afternoon. Welcome back to our webinar series. So this is the second episode in our webinar series. Today we'll be covering off getting through the first year, so common challenges you may face. So my name is Liam. I'm Service Improvement Manager here with First Formations. So I work with our sales, support and formations teams, and I'm your host for this webinar series. And I'm joined here with Nicholas Campion, Chartered Secretary and Associate Director. So he heads up our company secretarial teams as well as our sister company, Linear COSEC. So we'll hear a little bit more about them later in the webinar. So just some housekeeping. So we are on a Zoom call, so everyone will be muted today, just so you can hear us. Any questions, we will have time for questions, so feel free to pop them into the chat and we'll get to questions at the end. Now, just for those who joined us on the last webinar, thank you so much for your questions and feedback. It's greatly appreciated. And if it is your first time joining us today, welcome. It's fantastic to have you with us. So finally, just a little bit about First Formations, who we are and what we do. So we are the UK's leading company formations agent. We've formed over 1 million companies and helped many thousands of customers with expert advice, our company formation packages. We have address services and company secretarial services, as well as webinars like this one. So I guess to jump straight in, Nick, tell us what exactly can people expect from their first year?
You can expect a great deal from, well, anybody who goes into business can expect a great deal in their first year. Good news is it's going to be fun, it's going to be exhilarating, it's going to be rewarding. Maybe on a slight downside, it is going to be busy, it's going to be tough at times, and it is going to be demanding. You probably already knew that. And why is that the case? The way we sort of see this, and we see this repeated with our customers over and over again, it's sort of a universal experience. Why do people have a difficult first year? Why are there seemingly so many challenges to surmount in those first 12 months? Well, to answer that, you have to go just a little bit back before you set up your business, and ask why was the business set up in the first place. Well, generally speaking, people follow the same sort of patterns. Usually you've had a career in a certain field, or maybe you have had a passion in a certain area. You didn't like the office environment you were working at. Maybe you didn't even like the boss. Everyone has, there's all sorts of reasons why you might decide to set up your own business, to go it alone. Freedom, that's another one. It's the big one. It's probably 100% one of the top reasons why people want to set up their own business. But the thing is, the common understanding or the common thinking, and it is completely understandable, is, well, I was good at this work. I was good at the career that I was in, and maybe that's what the business is about. So it stands to reason, therefore, I'd be great at running a business based on this. Unfortunately, the reality is not quite the same. And why is that? I think Michael Gerber puts it very bluntly, probably the best way I can describe it, however, and that is most people aren't born entrepreneurs. It takes a very certain view, certain skill set, almost certain lifestyle to be an entrepreneur. That's the bad news, but the good news is most people are able to learn certain skills and learn the mindset and the ways which will allow them to go beyond being that good technician, that good worker who had a great career or who was very good at their passion, and translating that from looking at it from a technician's perspective to that of an entrepreneur, which is looking far beyond the immediate requirements, far beyond the work that you have to do now, but instead not just looking at what you're doing now, but what's going to happen in the future, years down the line. And basically, your first 12 months, and you could consider this the ultimate challenge, it is to prepare yourself and your business for growth.
Absolutely, and part of that preparation is many people would advise putting together a business plan. Is that something that you would say is important when starting out on your business?
It is, as you can imagine, it is a fantastically important thing to do. What is a business plan? Well, a business plan is essentially a document that just provides a sort of there's no set format, I should say, Liam, but generally speaking, it will include things like market analysis, operational plans, marketing plans, key objectives, goals, and tactics that you're going to employ to be able to achieve what your business has set out. And by doing that, you answer a whole load of questions, a whole load of burning questions that you might have about your company. Does it have any competitors? What are the prices that my competitors charge? Can I charge those prices? And if I do so, will I make a profit? And in terms of making profit, how long will it be until I do make that profit? And can I survive that amount of time between now and making profit? Do I have enough capital as it is? Will I even need to borrow? So it really orientates yourself, not just within your own company, but also within the wider market, if there is one. As I say, I don't think this can be underestimated. It's something that we would always recommend all of our clients, all of our customers, and as indeed when we discuss this with them through our general conversations, this is something we would always encourage. I'm sorry to do this. I am going to use that cliched quote. The quote being, failing to prepare is to prepare to fail. Nowhere more is this necessary. Now, if you're sitting there and you haven't started your business yet, you're probably on a bit of a high, or if you're just starting, you're a bit of a high, you're on that adrenaline, the excitement of running, getting your own business up and running. You've got 1,000,001 things that you want to do or that you need to think about, but we would say sit down and put it together and get help if you need to. This isn't just going through the motions, right? This is getting something that's going to orientate yourself, set your goals, set your strategy, set the tactics of achieving that strategy, right? You can't underestimate it. And if you have already started your business, so a lot of people watching this webinar today will have already begun their business. They might be a few months in, maybe a year or two in, and if that is you, and you haven't done a business plan, and this is maybe the first time perhaps you're thinking about it, then we can invoke that old Japanese proverb, which is the best time to plant a tree is 20 years ago, the second best time is now. If you have already started and you've already got a business plan, now is probably a brilliant time to take a step back and say, hang on, let's revisit it. Because you might learn a lot more now. In that time since you put that plan together, you may understand the market more, you may understand the strategies that work, or what is a realistic goal that you should be aiming for. A business plan is not a legal document. It's probably why a lot of people don't do it. It's not required, whatever. But it is something that you are going to have to refer to a great deal. And, it is also live. It's not a historical document in addition to being not a legal document. It's not a historical document. It's always something that will change as your understanding of your world increases. And although, again, it's not a legal document by any stretch of the imagination, so although technically not required, that doesn't mean no one's ever going to ask you for something. So third parties may oftentimes decide, yes, I'd like to see this. Common people who would hound you for your business plan, well, it's the usual suspects, lenders, banks, investors, if you have any, people that you want to bring on board onto your company. Oftentimes, business plans are the first thing that they might decide. Will help them make that decision, and a well thought out, well presented business plan is, invaluable for that reason. Just to give you a little bit of an example, so as Liam said at the beginning, one of the areas I work on is for our sister company, Linear COSEC. Now, First Formations is part of the BSQ group, which is one of the UK's top corporate service providers and formation agents. But just a few years ago, back in 2020, so right when the height of the pandemic really started kicking off, we set up a new company, Linear COSEC. And this was actually a spin-off from the company secretarial department that we ran already at First Formations. And the point of Linear COSEC was to tackle much more bespoke matters that we don't deal with First Formations, and for a slightly different cross-section of clientele. Now, in doing so, obviously, it was a startup. Linear COSEC was a startup. It was a brand new business with no base, everything starting from scratch, right? It was completely separate. It wouldn't operate in any way like first formations. But what the BSQ group did, so what the executive committee wanted, they said, we're very happy to put the money in, but show us how this is going to work. That was a consistent conversation, not just in setting it up, but long afterwards as well, constantly referring back. They said, look, show us how this is going to work. When are we going to expect to make money? When are we going to get that money back? And as I say, this was something we constantly reverted to, or that was constantly asked of ourselves at Linear COSEC. We were asked to refer back to the business plan. Is this working? Things had to change. Like I say, this was right at the start of the pandemic. In fact, it's like just beforehand, but almost immediately, sod's law, that thing happened. So the environment changed. As I said, it's not a historical document, it's a live thing. We had to go back and say, okay, that's no longer a realistic option. But we believe in such and such years. It was actually a 3-year plan, but we believe in this time period, that's when we can expect to start receiving some return on that amount. So it's just an example. It's just a little bit of an example how not only is it a document that isn't just written, filed away, it's also something that other people, in this case it was the executive committee of the BSQ group, how they're going to be so interested in it, right? How they're going to constantly be referring to it and saying, look, this is the marker of success. Where are we?
Mm-hmm. Absolutely, and love what you're saying there about it being a document that gets revisited and it's a living document that you work with. And also you mentioned business plans being able to help measure a company's performance. And obviously that's something that's going to be essential to growing, but obviously did you have any advice or information about measuring performance?
Measuring performance, again, is a key tenet of the ability of your business to be a success, right? It is what I find when we're speaking to quite a few customers is that obviously there's so much to do in that first year. There's so many things to set up. The business just hasn't existed before. Oftentimes, there's so much thing to do, and so much to do, and business owners are more concerned with doing the work than actually sitting back and assessing where they're at. But how can anybody decide if what they are doing is working? How can they know that maybe there's a few problems arising that if we catch early won't turn into something major? How can you possibly know that if you don't have some form of performance review, or more importantly, assessing the performance on an ongoing basis? You can't do that, and you don't know if something's working, and you don't know if you can invest into something or where to invest it if you don't have that. And I'm not just talking, when we're talking about measuring performance, we're not just talking about profit. We're not just talking about profit, and a lot of people will fall into this trap. People set up businesses with the view to making profit. I mean, that's pretty much why all of them exist. Except for not-for-profits. And oftentimes people will view that the prism of their success as to whether they're making money. Well, unfortunately, most companies in their first 12 months aren't going to make money. That is very rare, as I understand it. So the challenge for you, therefore, becomes, in that first year, deciding what is an appropriate means of measuring my performance. There are various ways you could assess your performance that don't include profit. It could be revenue, right? A simple understanding of all the money that's coming in, regardless of the costs that are coming up. It could be, if we're looking at, if you have the data, maybe market share. Maybe that is an appropriate means of understanding how your business is faring, again, particularly early on. Or it could be industry specific. So you could have an e-commerce company that lives and breathes through its website. Well, in the first few months, and maybe indeed years, you may not be concerned necessarily about profit, but am I actually getting people to the website? And when I am getting people to the website, so website traffic, and when I am getting people to the website, are they actually staying on there? So I'm talking about bounce rates here. That might be a much more appropriate means of measuring the performance of your business rather than profit right at the beginning. Because again, as I say, a lot of new businesses when they start won't make money for a long time. So how is that an appropriate means of understanding where you are going to be. And it doesn't just have to be quantitative, it can also be qualitative. And what I mean by that, probably the big one, is customer complaints. And you're going to know a lot about this because you deal with this every single day.
Yep.
Mostly from things I cause, I should say. Sorry about that.
You're not too bad, it's fine.
Complaints is probably one of the rawest, one of the easiest forms of performance, which you barely need to operate any framework for measuring. You know, Bill Gates, I think it was Bill Gates, I think he said that your unhappiest customers are your greatest source of learning. And I happen, and Liam, I'm sure you'll agree, you know, happen to completely agree with that sentiment, because, you know, your complaints are essentially an anecdote, a look into the actual real life experience of a customer that quantitative data, like order speed or what have you, possibly could never show. So with those things, again, you know, you've got to take those complaints seriously, and you've got to engage with those customers. You know, you've made them upset, right? Something in your business, rightly or wrongly, has made your customer upset, and you'll need to engage and rectify that to ensure it doesn't happen again. You know, it's probably one of the most fundamental forms of, you know, understanding your performance, monitoring your performance. As regards first formations, so, you know, we are primarily a e-commerce company. Our shop front is the website that I'm sure many of you will have visited many times. That website is therefore crucial to our business. And to give you an idea of the sort of ways that we would measure performance, you know, as an e-commerce company, one of the key things we do is formations, company formations. I think it's on the name actually. And inherent to that, we have a series of packages that we advertise on the homepage and of course on the compare packages. We would monitor the success of those packages in a variety of ways. It could be in a standard form. We might be simply looking at how many people are purchasing them, how much money are we making from it, but how many people are actually purchasing this particular package? And if we add in a few additional things or take away certain things, does that impact the success or the numerical or the number of those packages that are taken up? But that's not the only way, because other times there can be other pressures or other facets within the company that we have to understand that combines into the overall success of the company. And what do I mean by that? Well, let's think about it from an operational perspective. There have been plenty of times where we have changed the prices of our packages, not because we could make more money or the pricing doesn't work, it's pushing customers away, but there could be operational considerations as well. So for example, one of the things that we take quite seriously is the time between order and the company incorporation. You know, people need speed, they need things quickly, they need it now. So we pride ourselves on having a very quick turnaround time. But let's just say one of our packages is making a great deal of money. Happy days, lovely. That's generally what you try to do in business. But what if, although it's very popular, what if other issues are arising? What if suddenly, because we're getting such a high demand for a particular package, and this particular package has an inordinate demand on our resources, you know, internally, maybe, you know, from an operational perspective, which means that because we're having so many, we're massively increasing the wait time that customers are facing, which to us would be unacceptable. You know, as part of the customer journey, speed is of the essence, and you know, we'd be breaking our promise if we allowed that to happen and to do nothing about it. So then we have another, our other way of looking at it is saying, okay, hang on, this is causing issues elsewhere. You know, we're monitoring that performance, we're monitoring the speed, the average speed that the order's getting dispatched, you know, completed, and we're saying that's a problem. That's a problem, so we'll adjust the price. Maybe we'll increase the price just to suppress the demand, even just temporarily, so that we can get that back in order, make sure we're fulfilling our promise, and allowing us a bit of breathing room to then scale up so that we don't have that issue again. So you do want to get out of that mindset, particularly in your first 12 months, that everything's about profit, which absolutely is not. There are so many facets, and you as a business owner, you will find it infinitely more difficult to run a successful business if you don't have some handle, some idea as to what that performance actually is.
Absolutely, and as you say, customer feedback, absolutely vital, and knowing how to obviously measure that performance within your company. But if we take a minute and just kind of jump to some financial matters at the moment, let's talk about cash flow. And what is cash flow and why is that so important when it comes to especially new businesses?
Cash flow, okay, the definition of cash flows can be boiled down simply to the money going into a company and the money going out. Most people will know it from the cash flow statement or the cash flow report, which is, again, the money going in and the money going out over a certain period. But we would argue that cash flow should probably be more of a mindset rather than just some accounting matter. And the reason is cash flow, it's such an integral part to the financial management of the company, because if you don't have a handle on it, you could end up with nothing in the bank account, and if you've got nothing in the bank account, that may be the end of your business. You have to know at all times what's taking place, where your bank account is, where the balance is, what's going to be added to that balance today, what's going to be taken away from that balance today, where is it going to be at the end of the day. There is no way that you can plan any more than a day ahead if you don't understand where your balance is, what's in the bank, or what will be in the bank in the future. The best way I can illustrate it is another example from First Formations. The best way I can illustrate it is a story that is regaled to us many, many times you've probably heard this many times, by our chief executive and founder, Graham. Now, as I say, this story is repeated often to us to hammer home the importance of it. But the context of the story is we're going back many years to the turn of the millennium, so the year 2000, when Graham was setting up Blue Square offices. Now, Blue Square offices was a business centre based in Glasgow. It started off in a single property. And just FYI, Blue Square offices and that business centre is what eventually would give birth to the BSQ group that we know today. And Graham had a career beforehand, and he had decided to start a business himself. And very quickly, he tells us that he fell into the trap of what we sort of talked about a short while ago, that most business owners will experience at one point or another, and that's the long hours, having to juggle every single ball and not catching a lot of them. The unsocial hours, not really having a life, it dominates your life. It's a horrible thing or a position to be in. And he was driving home one day from work, and he stopped off at a petrol station, and he put the petrol into his car and then went inside to pay. And just at the cashier, he noticed some audio cassette tapes. This is dating it massively. Audio cassette tapes at the back of, or behind the cashier. And the cassette tapes were marketed to small business owners. And he in addition to paying for the petrol, he said, "Okay, I'll take one of them." So he took them out, and he put the cassettes into the cassette player in the car, and started listening to it on the way home. And he said the minute he did, it was sort of a revelation, epiphany to him, in trying to understand how he got himself into the position that he was in. Long hours, long unsocial hours, stressed, what have you. And he didn't go straight home. In fact, he just kept on driving round and around and around, listening to these tapes. The essence of the tapes, and what I'm going to say now is going to sound absolutely anticlimactic, but it's so fundamental that it bears repeating consistently, which again, as I say, we get a lot of. The essence of the tapes was know what's in your bank. Know what's in your bank, what's going to be leaving it, or what's coming into it. The tapes were even more blunt than that and actually said, you know what this is? This is just simply being called organised. How can you possibly do anything? How can you plan any more than a day ahead without understanding what's in the account or what's going to be in the account? Or, nothing else matters if you don't know what's in there. So that's a story that gets repeated over and over again, these tapes, and I think to good effect, for good reason. And just as a final point on cash flow, I kind of disparaged the cash flow statement earlier, probably unfairly, for two reasons why the cash flow report may still be important. Number one, in your first year, we would generally, I guess it's very important for small businesses to be producing a cash flow report at least once a month for the first 12 months, understanding again what's going in, what's going out, where am I going to be, and updating that weekly. As your business progresses, maybe new overheads come along. That's something that you need to be putting together straight away, and that's one of the key challenges, getting into that mindset right from the off, being organised and understanding what's going in and out. The final matter I would say, cash flow reports are also useful, again, for third parties, lenders, banks, investors. Why? Well, again, because things like profit probably won't be an appropriate means of assessing your company if you need to engage with them for any reason. A cash flow report is one of the most oftentimes requested documents for those third parties to get an understanding of where your company is at. So very important. But as I say, the simple mindset, and this is not massive, this is not a massive revelation, but it bears repeating, it's simply knowing, being organised and knowing what's in my account and what will be in there tomorrow.
Absolutely, and as you say, it sounds basic, but it's just fundamental, especially within the first 12 months of a new business. Now, we've touched on a couple different concepts that may sound a little foreign or may not have been heard of before for some people. I guess when you are encountering these new concepts, when and why is it important to ask or seek advice from professionals with a new business?
I think the most important thing to remember is that business owners, despite the stereotype, despite the glorified image, they're not superhumans, they're people, that they're not going to be able to do everything themselves. And generally speaking, there's maybe a handful, 5, 6 different skills that that a person would need to be able to succeed. If it was just one person doing the business, and most people would only be able to do one, maybe 2 of those, financial management, operational capabilities, that sort of thing. So what does that mean for you? Because you're never going to be able to do everything at once. You're never going to be able to juggle everything successfully. You are going to drop the balls on the floor, and it's going to cause a load of problems. So that's, it's such a massive moment for your company, particularly in terms of scaling up, when you start reaching out to others, professionals, what have you. Now, you can reach out and you can bring the other people, other professionals into your business one of 4 ways. The first of which actually is to learn it yourself. There's a lot of online courses now. They are plentiful, or books. There's plenty of ways you can learn new skills in the digital age. But, in the first 12 months, you're going to be busy. It's not like you're going to have all the time in the world. You may not have time to be learning new skills all the time, and really you probably only be able to add 1 or 2 others. You're still going to have deficiencies elsewhere. So although it's probably one of the most efficient ways, or probably one of the most cheapest ways of, once you've identified areas that you aren't good at, it may not be the most appropriate. So, okay, maybe you can't do it yourself. So let's start looking at other people. The first of which could be hiring someone, hiring someone to, to deal with something on an operational matter. But again, you're running a new business. Oftentimes new businesses are quite short of capital. That might not be an option for you. And if that's not an option, then you can go to the third option, which is maybe bringing in a partner. So someone who maybe take an equity stake in your business in exchange, and what you do, this partner would complement your skills insofar as you can deal with your areas and they can deal with the other areas that maybe you're not so good at. That's a common way of dealing with that skills deficit. And the final thing is engaging with a third party, engaging with a consultant that can deal with these sorts of things. When we're talking about engaging professionals, what we're not doing is talking about ditching your responsibility. We're not saying give it to someone else, forget about it. That's a surefire way to cause even bigger problems later down the line. It's about bringing other people to do maybe the legwork, the stuff they're good at, and keeping a close eye, monitoring them. Always keeping tabs on what's happening, not in an interfering manner, but understanding what's taking place, not leaving things to chance, essentially. Now, what are the sort of third parties that you can bring, that you can involve here? Well, I think the big one that everybody is going to be aware of is probably the accountants, and the accountants are probably one of the biggest, if not the biggest, and most important engagement that you're ever going to make in a business. A good accountant is worth their weight in gold, because they're not just going to assist you in compliance matters, which is your annual accounts and so forth. In your first years, or year, and indeed years actually, they can be there to help you put together financial processes, maybe recommend or even put together the bookkeeping software like Xero or Sage for your business. They could even help write your business plan. That's usually where you would go if you did need help. A massively important engagement, and oftentimes something that you'll go to a third party to deal with. Other areas, you could look at legal matters that you need to defer to professionals on. So, when you set up a company, oftentimes you need like a library of documentation ready to hand. And I'm not talking about setting up the company here. I'm talking about from a business perspective. Your website terms and conditions, your employment contracts, GDPR, privacy policies, these sorts of things. You don't even need to hire a solicitor. You don't even need to engage a solicitor now. There's a lot of websites online that have these packages, packaged documents that you can take and just adjust yourself. There's a lot out there. From a regulatory perspective, if your market happens to be regulated a great deal, that's another area that would be key, I guess, in terms of deferring to a professional, engaging them. Again, not simply letting them loose, but continuing to keep tabs on them all the time. Maybe an example from us, First Formations is, as I say, a company formation agent and a corporate service provider, and therefore our activities fall under the scope of the money laundering regulations, which means we are supervised for anti-money laundering purposes. It's a very important regime in combating financial crime, and it's something we take extremely seriously. And indeed, not only do we have a fully fledged compliance department to deal with these day-to-day matters, we also very regularly engage with third-party consultants to help us ensure that not only is our framework up to scratch, but if the required framework changes, that we remain compliant. As I say, something we take very seriously. Other areas, and these are just two areas. We could go on forever about the things that you could, that you might seek to defer to a professional or engage a professional in. We're talking operational matters. We're talking, SEO, these sorts of things. HR, absolutely, absolutely.
Lovely, yeah, absolutely. And just, I guess, to piggyback off what you've just mentioned there, obviously we touched on this in the last webinar as well, and that was making sure that your company remains compliant. So I guess when doing these kind of, delegation how do we ensure that the company is remaining compliant?
Yeah, what is compliance? What is staying compliant? It's fulfilling your legal obligations. When you create a business, and usually that's done through creating a legal entity, the company, you're entering an agreement with the government, who again will say to you, look, you can have the benefits of creating your separate legal entity, which is going to enjoy that holy grail of limited liability amongst all the other benefits that come out from having such a company. Well, in response, or in exchange of having those beautiful benefits, you've got to do something in advance. And that's where your legal obligations arise. In its most basic form, most people will know it. If we're talking strictly in a limited company sense, most people will know it through a confirmation statement or your annual accounts. You could also talk about it from a tax perspective, which affects most companies. Our advice, our perspective is it's so fundamental to the agreement that you made in creating that company for your business that it is something that you want to seek professional advice on. Just to go back to what we were talking about earlier, it's something that you want to engage an accountant on generally, even though it's not required to have an accountant, making sure that these things are sorted. Because the challenge here in your first 12 months, in addition to setting up your business, getting it off the ground, up and running, and everything that would entail, you've also got these legal obligations in the background just to keep the company going. Balancing those two out is an enormous challenge, and that's why we generally, and certainly myself as a company secretary, would advise, look, get advice from a professional on this. Because again, it's not just, can I fulfill the obligations on me now? Well, if those obligations change, the environment is changing all the time. For example, it's April now. At the start of the year, the month, corporation tax changed for the first time in quite some time. The rate moved up from 19% to 25%, although there remains some relief for smaller businesses under a certain amount. Again, we're not talking about a static environment. You're talking about a constantly evolving one, and being compliant is important for a whole host of reasons. Not just legal. So, for example, with the accounts and the confirmation statements, if you fail on those, okay, the penalties could be a fine. If you're late, if your accounts are late, your penalties could be, if it's really late or you're just not submitting it at all, you could lose your company, in which case that's it for your business. But there's also a reputational matter that goes beyond the legal elements. If you're ever seeking to bring other people on, ever seeking to bring investors or what have you, one of the first things that as part of their due diligence that they'll do as part of the due diligence is checking, okay, what's the life of this? What was the life of this company up to this point? And if they can see that the legal obligations, certainly with respect to Companies House, can't even be fulfilled, some of the most core responsibilities in exchange for getting that company, and if business owners haven't been able to fulfill those, unfortunately, from their perspective, they may say, well, how can we trust that person? How can we trust that person to stay on top of the business if we can't even get the basics right? It's a very, it's a strong way of looking at things, but that's the environment we're in, and that's why I would never suggest leaving this sort of thing to chance.
Absolutely, definitely. And I mean, we touched on it, like I say, in the last webinar in terms of filing requirements, and we have a number of blog posts through the website that you can access. There's videos on the YouTube channel if you did want to find out a little bit more about compliance and filing requirements. If you do find you need to file a confirmation statement, First Formations, we can help you out with that as well. And if your company is dormant, we can also file dormant company accounts for you. But another big challenge that we see or that we hear from our customers is with regards to attracting people and retaining people within a new company. So disregarding the legal side and the process, which would be out of our remit, but do you have any advice for people in terms of retaining and attracting people into especially a new business?
It's all over the news. This is probably the challenge of the day, challenge of the present era, and unfortunately, of course, it's not much easier for fledgling businesses. There's a couple of reports I recall. There was a parliamentary report earlier this year which said there's over 1 million vacancies, I think 1.19 million vacancies currently in the UK alone. The FSB, that's the Federation of Small Businesses, not the old Secret Service. The FSB reported last year, August, they said that 80% of companies surveyed at the time reported that they struggled to hire for certain skills. They were struggling to find candidates with the skills that they required. That's the challenge that people are facing in right now. Remember, bringing on people, even just engaging professionals, it relies on people having the skill set or being able to bring people in whichever manner you seek to deal with that. So it is a massive challenge, not just for small fledgling businesses who've just started, but also for very large companies as well. In the UK, they all hire from the same pool of people, and it is a challenge that all companies are facing. Now, what can you do for that? There's not too much I can say, certainly, that will be revelatory here today. But there are things that you can do that can give you an edge. The first of which probably would be competitive salaries. Now, when you go around hiring, you need to understand the industry you're in. A lot of recruiters in particular industries produce reports that provide you with good guidance on the sort of salaries that you are going to have to pay. The environment that you foster in your company is also highly important. You're wanting to foster an environment, a creative environment, and a social one too. How can you do that? Well, it's not just through the values of your business, but also where you do your business. So, creating an office environment which is conducive to that, fitting out an office is a brilliant way of doing so. In fact, we're currently undergoing a process, a 7-figure fit out of our offices to do precisely that, to create an environment that is conducive to creativity, but also to take the social side of things as well. You are going to probably have to consider the working arrangements as well. It's no secret that many people do want to work from home, at least on a hybrid basis. I'm afraid that is probably something that a lot of people will have to consider. Just going back to salaries, actually, here's a good point. Even competitive salaries from the off may not be enough. What we do, and what you could consider, is linking, indexing salaries to cost of living adjustments. So what happens every year with us is that everybody in the company gets a pay rise in line with inflation, so that people don't lose out. Inflation is has been a big thing. It's been high all over the world, and you don't want your staff to lose out. The other big thing I'd probably say, Liam, is training and development, which can also then be brought into career plans. So, just to go back to those reports I was talking about, we're saying about how many businesses are without, can't find the relevant skill set. Well, that's probably where they would come in to provide that level of training, whether it's in-house or external, providing funding external training, whether it be through masters or MBAs or even professional qualifications. That's a key thing that a lot of people are looking for at present. And again, to have people in here for the long run, you need to consider giving career plans so that people have a structure. They understand, if I stay here, and I put in the work, this is where I can end up being. This is where I can end up being, what I'll be doing, and what my salary will be. It's not always easy to do so, but again, mapping that out for people, providing development opportunities, providing training both internally and externally, hugely beneficial for you in retaining people. I guess the final thing I'd probably say is probably considering giving people shares, giving employees shares. This is something that we have noticed, we're not the only ones to have noticed, but is increasingly popular. Using equity, so part ownerships of companies, as a means for, again, attracting and retaining staff, particularly for your leaders or those in higher positions in the company. That's definitely, post-COVID, something that is demanded demanded a great deal more. And the great news is there's plenty of tax-advantaged share schemes approved by HMRC that you can use, which means you can give shares or provide options for shares to employees for a much lower cost than you would have to otherwise. Usually giving shares entails a great deal of not just the cost, but tax implications for both the person receiving the shares and the company itself, which may render that prohibitive, or may render it not an option. So these schemes, I'm talking company share option schemes, EMI, the enterprise management incentives, these sorts of schemes which are approved by HMRC are a great way of getting people to buy in for the long haul. And how do you get them to buy in for the long haul? Well, you give them a slice of the pie.
Absolutely. And just on that note, I mean, when we're talking about shares, isn't giving away shares in your company a bit of a massive step to take?
It is. To use the pie analogy, you're giving away bits of your baby, really. I completely understand the hesitancy that a lot of business owners would have. You say, that I built most of this, this is my thing. This is why would I want to give away shares? Well, what I would say to that, and again, the purpose of the seminar, we're really talking about, we're talking about those first few months, those first 12 months in particular. But even outside of those first 12 months, you will find that you're going to be quite limited in what you can offer. We talked about some of the benefits. We talked about career development plans. We've talked about competitive salaries. I didn't mention it, but you could also talk about other private insurance benefits, health insurance, or providing employee assistance programs, these sorts of things. You may be far more constrained as a fledgling business who's just started out, and giving equity is your ace up your sleeve. But it is a big decision. It is a big decision. But let's not just, let me just clarify how some of these share schemes work, because it doesn't just necessarily mean if I started a company and I hired you, I know you wouldn't join one of my companies, but let's just say, I did hire you and I wanted you to stay in for the long haul. So I say, okay, Liam, I'm going to give, here's some shares. Well, actually, under some of the schemes, you won't actually receive those shares just yet, right? You get options over them. Let me tell you how CSOP, company share option plans, work. This is the best way I can describe this. So what would happen is HMRC would agree a valuation with myself. They would say, right, your company is worth X amount. I then go up to you, I say, Liam, I want you here for the long haul. I want to give you some of this company. And just FYI, for a company share option plan, you can give up to, it's actually just increased a few days ago, up to £60,000 worth of shares. I say, all right, Liam, I'm going to give you options, that's the key word, over, £10,000 worth of the shares in my company. Liam then can't take those shares immediately. He has to wait at least 3 years, a minimum of 3 years, at which point he is allowed to exercise them, whereupon he'll pay them at the original price from that was determined by HMRC back at the start of the program. So even if your company has grown massively, he still only has to pay that discounted rate from that HMRC valuation earlier. And normally what would happen if it wasn't through a regulated scheme like this, you would then have to, you'd either have to pay the difference or a massive amount of tax, which again, I'm sure you'd probably turn around and say, Nick, you're having a laugh, I'm not paying that amount to take up shares in your company. So in the first instance, particularly with CSOP, you're not actually giving the shares away immediately. In fact, Liam's going to have to wait 3 years until he gets part of my company. But it gives him something to work to. It's a genuine benefit, it really does help, but it's not this instantaneous thing that's going to happen, right? And that's just one of the schemes. There's another scheme called growth shares. That's another way that you can give out parts of your company, but retain control for at least for the time being, and not immediately lose out on what you've worked hard to produce. Growth shares, essentially the way they work, and I appreciate this is getting a little bit technical, I'm sorry for that, but this is the best way I think, describe how these things might work and why you don't want to look at these, just immediately think, no, I've got massive challenges in hiring people, I'm a fledgling business, it's a difficult environment. I'm just trying to give an idea of some of the options open, particularly for small businesses that have just started out. But with a growth share, with growth shares, what happens is, again, you ring fence. What you do, you decide how much your company is worth. In very simple terms, you ring fence that value, right? And then you create a new class of shares called growth shares, which you can then give to people like yourself, Liam, or it's often used for senior hires. And what then happens is they actually participate not in the amount, the amount before, that ring fenced amount, the stuff that you built. What they participate on is all the amount in excess to that, the bit that they help grow the company on, and they can participate on that rather than, essentially you're doing, if you know what I mean. And even better than, well, depending on how you see it, a lot of the times growth shares don't even entail voting rights. So even when you are giving those shares to people, doesn't necessarily mean you're losing control from a voting perspective. So yes, in answer to your original question, Liam, and again, I'm really sorry that got a little bit complicated, but it's an important point, and it's something that is really, as I say, the ace up the sleeve, the big thing that you can many companies can give, even in their early stages. It's a big deal, but maybe not as big as you want. It's definitely something that you want to explore.
Mm-hmm. Absolutely, definitely. And so now we've got time for some questions. So I'm going to grab some here, and then with the questions, we will try to get through as many as possible. We've had a lot of responses. Thank you very much. Any questions that we don't get answered, we will try and get in touch with you and get through, like I say, as many as possible. So if we don't get to your question, please keep an eye on your email as well. We will try and reach out. But just to start us off, so I've got one from Igor, and he is asking, I have a question regarding the public register. Is it possible to make it private?
Okay, so the question relates to the public register, what's put onto Companies House, I believe. And when you're creating a company, when you're forming your business, and you're forming that separate legal entity, the details of that business will be placed on the public record, easily searchable through Companies House service. It's remarkably easy to find out so much about companies through that service. Can you make it private? The short answer, the easiest answer is no. So essentially, the UK government strategy has been transparency is key. Why is transparency good? Well, one of the key reasons why everything has been made so available and so cost effective, so free. One of the reasons that has happened is the view that if there's more eyes on it, whether it's civil society groups, government agencies, or even just general members of the public, Joe Public, the more eyes that are on companies' filings, and the data that's on there will include everything about who the directors are, which country they're from, where they can be contacted, not necessarily the home address. I'll get onto that in a minute. All of that, the more eyes that are on that, the more companies will feel compelled to get the information right. Because if you get more people looking at it, who, remember, even general members of the public can report companies and say, hang on a minute, this is rubbish. These guys are lying. General members of the public can do that. You can do that through the Companies House service. With that pressure, with that many eyes on you, it compels people to it's a driver for ensuring the integrity of the information. That's the reason why Companies House and the government is so keen on making this data so public. Now, in answer to answer your question specifically, can you make the information private? As a general rule, no. Your company will be listed except in some very exceptional circumstances. I'm not actually aware of this ever happening, but I'm sure it can happen in theory. In very, very exceptional circumstances, maybe you can get a court order not to have it displayed. But in general terms, if you form a company, it will be on there. Now, that doesn't mean you can't do anything from a privacy perspective. Number one, you don't have to put your home address onto the public record. You can use, if you're a director or a person with significant control, you can use a service address. We provide a service address for £26 plus VAT a year. And that would be the place that people would go on and say, this is how I contact this person. Some of the data is now suppressed. You used to have your full date of birth on there. That changed, I think about 2016, 2017. That has now changed. It's only the month and the year. So certain pieces of information like that can be hidden. There is also some additional, devices that you can use to prevent other groups from seeing the data. So people like credit reference agencies, they plug their data directly into Companies House, so they actually see some of the private information that isn't made public, like the date of birth, like the home address, and so forth. You can also prevent that happening in certain cases. If you're a director, you'd use a Section 243 exemption. I can never remember the PSC one, but they have a similar one. It basically means the data becomes even more private, that even these authorised bodies can't even go behind the scenes, what the public can't see, and check the data there. You can prevent that too. As I say, so service addresses or even just the registered office address, you can just use services like what First Formations do, is providing a virtual registered office, whereupon we put our address onto the public record in place, where otherwise you might have had to put your home address. So no, to make it very in the most simplest terms, most companies, almost all companies, will have to go on there. There are things you can do to make that a little bit more private. And actually, there are a few proposals coming in very soon that will make some of this data a little bit harder to look at. It'll be easier to suppress your signature. Sometimes you've got to sign things in paper. You'll soon be able to block that out. Occupation, directors are asked for occupation. I believe that's going to be something that you can suppress. So, unfortunately, yeah, sorry, Igor, it is something that that will go on, but there are things that you can do. It's not something that you're immediately going to go on there, you're going to be completely exposed. That's definitely not what it's about. It's just so people can see, okay, what's this company? What's their makeup? Generally speaking, what do they do?
Absolutely, yeah, good to know. And I like this question from Sam. So I'm looking to employ my first team member. Congratulations. Is there any benefit to making them a director of my company?
So Sam clearly got through the problem of hiring and retaining staff. So is there a benefit to making them a director? That depends on what you want this person to do. So when the person is made a director, what does that mean? They take on a high degree of personal responsibility to the company. They become legally responsible for a lot of facets, whether it's maintaining accurate financial records, ensuring certain regulatory submissions, say to Companies House, are completed. That is a big onus on people. Some people may actually say no. I know plenty of people who've been offered, or indeed customers who've spoken to me said, I even offered to make this guy a director. Actually, that's something that I hear a lot. They may go through the process, and the person finds out exactly what's involved with being a director, only for them to kind of push back or pull back from that at a later point. But if you want someone who's a part of the official management of the company, who will take part in decision makings of the company, then making them a director could well be right for you. Remember, as a director, they'll be required. You are required to provide them with certain financial information about the company. They are looking after your company for you, so they have a right, they have a requirement to see certain things about the company, particularly from a financial perspective. Some people don't like doing that. They might want to keep things much more private. I'm not sure if we're talking more about, is it a way of attracting people? Yes, I think absolutely saying, look, I'll make you a director of the company. That's certainly something, but it's not sort of like a freebie. It does put a great deal of responsibility on them, which might actually help you. Let's see it from Sam's perspective, that he might be the sole director at the minute, and therefore all of the responsibilities are placed on him, on them, and that might not be a situation that they want to be in, right? Appointing another director is a great way of doing so. For example, the Charities Commission, I think their guidance, if you're setting up a limited by guarantee company to be registered at the Charities Commission, one of their guidances says you should have at least 3 directors. This is a big responsibility. I think for property management companies as well, the general view is that you're going to need a few more than just one person. This is a big thing. So it can benefit the person that you want to make a director. It can benefit the person, the business owner, in making someone else and bringing them on and being able to rely upon them. But it doesn't come without cost to both the person becoming a director or the person making them a director.
Definitely. And I guess this one here may be a good example of where you may need to seek some professional advice. But this question here, I think I've chosen the wrong SIC codes. I've chosen 4. One SIC code is regulated, the others aren't. Would you suggest having separate businesses for different activities?
That is a good question. That is a good question. I guess the issue, so what they're saying, so what this sorry, what was their name?
I've got a name. Tunisia.
So Tunisia, the question is basically, you might recall when you set up a company, you had to enter in your standard industrial classification codes, the SICs, which you could select between 1 and 4 different codes, which are there to describe what your company is going to be doing or is doing. And the question there is, I think one of them is regulated and one of them is not. And what you'll find is that sometimes certain SIC codes can be problematic. Certain activities that you might be undertaking would cause some people to pull back. It could be something as simple as opening a bank account. There are certain SIC codes that some banks will say, look, I don't want to get involved with this company if you've got that SIC code. Property is often the big one. I can't remember which one it is, but they often say, look, unless you get rid of this code or unless you don't deal with this area, we're not touching you at this stage. But what the question is, should I then, because obviously you're doing the business, why don't I structure it so I've got two entities, two companies, maybe with a common owner, one of which is going to carry out the activities, the non-regulated activities, and one of which is going to deal with the regulated activities. There is no right answer because, unfortunately, I don't really know the context of this question, but that is potentially feasible depending on the situation. So by how shall we say it? By isolating the SIC codes with the regulated activities into a single entity, you might then be able to structure the company or put in place whatever's required by third parties to allow them, that would placate any fears that they might have, or allow other third parties a bit more of a forgiving view of that entity. So look, you've got your non-regulated, you've got your entity with your non-regulated activities, SIC codes that aren't problematic. It can do what it wants, whatever, and it's not going to be shackled by this other entity, which has got SIC codes that go into the regulated realm. I think that is a very feasible. That is one way of dealing with it. Again, unfortunately, this is a little bit without context. I'm so sorry. I can't really give advice on that. But here's another example. A few months ago, I was assisting with a restructure of actually another corporate service provider who was setting up a accountancy firm or accountancy division. And with accountants, and particularly with the accounting bodies, they have very specific requirements of the ownership structure of the business which is going to carry out the accounting work, right? So for them, it wasn't as, they had just a single entity. Well, no, it was a single entity owned by a holding company. But for them, it was inappropriate to do the accounting work through the existing entity because the ownership wasn't in its way. So what they had to do, they had to create a brand new entity with a slightly modified ownership structure that would still be tied to the holding company in some way. And that is literally a regulated activity, accountancy. That's how they got around to it. Maybe that's sort of the problem that they're facing as well. But separating it, this sort of thing has accounting, regulatory, and taxation considerations to take into account. So again, I'm sorry. All I can say is that yes, that could well be feasible, but we'd have to know exactly who's having the issues, who's kicking up a fuss, if anybody is. But if someone is, like with the accountancy bodies, like I just said, maybe separating it into another entity and ensuring it's set up in such a way that the others are happy with it. Very valid way of dealing things. Very valid way.
Nice. We've got a nice easy one to follow up from that one there. So do we get a reminder of important submissions that we need to comply with, i.e. Companies House, if there are any?
So Companies House, they used to send a lot of reminders out. So the two important things, and again, look, we're talking about the first year of business, and a lot of people are seeing this sort of stuff for the first time, learning that regulatory environment at a time that they're supposed to be really, setting up their business in the general sense. You don't get massive amounts of reminders anymore. You used to have. So there's two things, confirmation statement and annual accounts. We spoke about it a little bit earlier and indeed in our previous webinar. Now, the annual accounts and the confirmation statement are the two key annual filings that you need to submit. Companies House used to send out reminders, two reminders in the run-up to this. There were letters that go to the registered office. We used to get thousands of them at our address here in Covent Garden. That doesn't really happen now for various reasons, not least environmental. It's an enormous amount of letters that they had to print. It doesn't happen anymore. So oftentimes their reminders are actually after the fact. They'll send out paper warnings saying, hang on a minute, your confirmation statement was just due a moment ago. Where is it? You know, hey, we asked you before what happened, where is it? Maybe not in such a rude manner as that. This is why they don't get me to write this sort of thing. You know, they'll do that in retrospect. So what I would say to you, in that case, understanding that now, and we're just talking about Companies House here, there's two things you can do. Number one is rely on a third party. Like First Formations, we send out automatic reminders to all of our customers who either form their company with us or import their company onto our system. You can also use, actually I should say, you can also use our services that deal with, say, the confirmation statement. You deal with a third party professional to deal with these sorts of things so that you don't have to keep a tab on it. You can also use Companies House's own reminder service. I think it's on the main Companies House page these days, and you can get automatic reminders, and they'll send it via email. That's how we send the reminders, via email, by the way. So Companies House has never had a legal responsibility to tell people or remind them what's coming up. They've never done that. They did that of their own volition to help people. They've had to stop it for various reasons, not least costs and you know, massive environmental footprint that was causing, but there's still things you can do. You can either do it electronically through Companies House directly or through a third party, or you can get a third party to just handle this sort of stuff on your own, whether it's us to deal with a confirmation statement or an accountant to deal with the accounts.
Absolutely. I think we've got time for one more. So I've registered my company in January, so on January the 30th, 2023, but I haven't received the UTR. Is this process normal?
So the question is about the UTR, the Unique Taxpayer Reference, which is one of the many codes you get in registering a company. And again, it's a key consideration for new businesses in their first 12 months, getting their tax affairs in order. And you can't really get your tax affairs in order if you don't have the Unique Taxpayer Reference code. You need that to register for corporation tax, to identify yourself, and so forth. So January 30th.
January 30th.
Yes. We're in April now. The general advice is that it takes about 2 weeks to be received at the company's registered office. If that hasn't happened after this time, I would certainly request a reminder. Requesting a reminder is fantastically easy now. You can go on the HMRC's, if you just type it into Google, HMRC UTR send reminder or something to that effect, you'll go to a website, will say, all right, tell me your company name, tell me your registration number. You put it in and say, right, this is it, this is your company. You say yes. Say, okay, we've sent you the UTR. It'll be with you in about 5 days. You know, give it 2 weeks.
Yeah.
So it's really easy to request a reminder. You know, near gone 2-3 months, I would suggest that maybe something's gone wrong. Maybe they haven't sent it. They're not infallible. It happens. But you've also got to remember that the UTR is needed to register for corporation tax, which if you're trading, you need to register within 3 months of commencing trading. So if you started trading from the moment you're incorporated, you really need to be registered with HMRC as soon as possible. And to do that, you need the UTR. So in your position, I'd ask for a reminder. Go online and request a reminder. It's super easy. Get that sorted so that you can make sure that box is ticked and you're not going to get any bite back from there.
Definitely. And if you are using our registered office, double check through the online portal. From the customer dashboard, you can click the My Mail option, and any mail that we have received, if you are using our address services, will be scanned and uploaded there, usually the same day that the mail is received. So just double check. But that's pretty much all that we have time for today. Thank you for all the other questions that have come through. Like I say, I'm so sorry we haven't been able to get to them today, but keep an eye on your email. We will endeavour to get in touch with everyone and get through these questions for you. So just like before, so there will be a recording of this webinar uploaded to YouTube. Give us about 24 hours to get that up, and if you do need to re-watch anything, feel free to jump on YouTube. You can take a look at the videos that Nick has put up. There's heaps of them on there. Like I say, there is more information on our blogs. If you haven't had a chance to view the first episode of this webinar series, that is also up on the YouTube channel. We go through life after incorporation and what you can expect after incorporating a company, common things you may need to understand. But that's pretty much it for us today. If you have any other questions that come off the back of this webinar, please do send them through to us. The email is talks@firstformations.co.uk. So it is 1st formations.co.uk, or give our customer support team a call. They'll be more than happy to speak to you and answer any questions you may have. But if not, hopefully you will join us next month for the third episode. And apart from that, have a great evening and good night.
Cheerio.